Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing regarding Nifty and Bank Nifty, the key levels to watch out for the day, as well as the key sectors in focus in today's trading session. First up, coming to the update regarding the past week. So, during the past couple of trading sessions, if we see the continuous sector rotation is helping the market sustain as well as move higher. In the current week, we saw that IT, pharma, railway, defense, private bank, oil and gas sectors have contributed to pushing the markets higher. Hence, taking the sector rotation into consideration, the current market appears to be one where trailing stop losses are more relevant than setting specific targets. Coming to Nifty, for the second consecutive week, Nifty has ended on a positive note. It has formed a sizable bullish candle on the weekly scale, which is definitely a bullish sign. If we see, the momentum indicators and oscillators are also supporting the overall bullish chart structure. Going ahead from a weekly perspective, if we see, the support zone has shifted higher in the zone of 24,000. As long as the index is trading above the psychological level of 24,000, it is likely to continue its upward journey and test the levels of 24,600 followed by 24,850 in the short term. While on the downside, if the index slips below the levels of 24,000, the next support is placed closer towards 23,750 levels. Now coming to Bank Nifty. During the last week, the banking benchmark index Bank Nifty has underperformed the frontline indices. However, it has managed to mark a fresh all-time high. After the sharp upside rally in the past couple of weeks, the index has slipped into a period of consolidation. Since the last 8 trading sessions, it's oscillating in the range of 53,357 on the upside and 51,997 zone. Technically, if we see, the major trend of the index remains bullish as it is trading above its short-term and long-term moving averages. These averages are in rising trajectory and they are in the desired sequence, which suggests that the trend is strong. The daily weekly RSI is in super bullish zone. Going forward, any sustainable move above the levels of 53,400 will lead to a sharp upside rally up to the mark of 54,000 followed by 54,500. While on the downside, the zone of 52,000 51,900 is likely to provide cushion in case of any immediate decline, as it is the confluence of the recent swing low and the 13-day EMA. Now coming to the broader indices. Before we begin, let's do a recap of what we had mentioned in our previous market update. We had said that the broader markets may throw a surprise party as they are on the verge of a bullish flag pattern breakout. In line with our expectations, the Nifty Mid Cap 100 and Nifty Small Cap 100 have strongly outperformed the frontline indices and both have marked fresh all-time high. For the fifth consecutive week, Nifty Mid Cap 100 and Nifty Small Cap 100 have ended on a positive note. They both have formed sizable bullish candles on the weekly scale. As they are trading at an all-time high level, all the moving averages and momentum-based indicators are suggesting strong bullish traction in the index. Talking about levels for Nifty Mid-Cap 100, the zone of 56,500, 56,400 is likely to act as a strong support. As long as the index is trading above 56,400, it is likely to continue its upward journey and test the levels of 57,800 followed by 58,300 in the short term. The Nifty Small Cap is likely to continue its positive momentum and test the levels of 19,300 followed by 19,500 in the short term, while on the downside the support has shifted higher in the zone of 18,650. Now coming towards the sectors to watch in trade, so we have Nifty Pharma. So in line with our expectations, Nifty Pharma has strongly outperformed in the last week. We believe it is likely to continue its upward journey as during the last week it has given a horizontal trendline breakout. It is likely to test the levels of 20,700 followed by the psychological level of 21,000 mark in the short term, while on the downside the zone of 20,000 is likely to provide cushion in case of any immediate decline. Next up we have Nifty IT. Since last couple of weeks, Nifty IT is outperforming the frontline indices. The ratio chart of Nifty IT as compared to Nifty is at an 11-week high, which is a bullish sign. Going forward, it is likely to test its prior swing high of 38,559, which was registered in the month of February. Any sustainable move above the levels of 38,559 will lead to fresh upside rally in the index, while on the downside if we see 37,100 will act as the immediate support. Railway and defense. The stocks from railway and defense space have witnessed strong bullish momentum along with robust volumes in the last week. We believe they are likely to continue their outperformance in the next couple of trading sessions. However, we recommend to follow a strict stop loss in both the sectors. Nifty Auto and Nifty Metal, due to the consolidation since the last couple of trading sessions, if we see the Bollinger Band has narrowed significantly. In technical parlance, if we see it is known as Bollinger Band squeeze. It occurs when the volatility falls to low levels and the band narrows. A volatility contraction or narrowing of the bands can foreshadow a significant advance or decline. Hence, we expect trending moves in both the sectors in the next couple of trading sessions. The last sector which is in focus is Nifty Oil and Gas. On the daily scale, if we see, it has given a horizontal trendline breakout. The RSI is sustaining above 60 levels and it is in a rising trajectory. Hence, we believe it is likely to continue its traction on the upside and test the levels of 12,800 followed by 13,000 levels in the short term. While on the downside, the zone of 12,200, 12,150 will act as the immediate support. That's an end of today's podcast. Thank you for regularly tuning in. Wishing you all a happy trading session. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.